Now, to most that have been trading for a period of time, have more experience, you know that the market is fueled by liquidity. Areas where we're looking for, or the banks and institutions are looking to take out retail traders at either areas of supply or demand zones. So they break through or run through an area of demand to the downside or supply to the upside, and they're looking to test either a slightly higher area or slightly lower area. Liquidity is pretty much the golden coin in the business or game of trading that the banks and institutions are set out to seek. They want your money, and they'll stop at anything to get it, because that's what fuels and drives the market. It's what fuels and drives the big moves that we see, where we see aggressive buying to the upside, okay, or aggressive buying to the downside. Think about it like this. Have you ever been caught up in a trade situation to where you took a trade at what you thought was a decent demand zone, okay, and then maybe where there was another demand area right below that, and what happened is the market tapped your demand area, pushed up a little bit, went in your direction, and then came back against you? What it was doing was taking out all those buyers at a key demand zone. And the banks and institutions say, hey, we're going to set up a trap to really capitalize on and take some money here, just to push the market a little lower, to do what? To get in at a better price or a discounted area in which they can fuel the market to push it back higher. That's how liquidity works. It's the driving force that the banks and institutions are after in the market. They set it up, okay, pretty much. They're setting up all these golden zones within the market so they can trap traders. That's their goal, okay? The more money they can take, the bigger moves they can make, meaning they can get into better price entry points at discounted areas if they're looking to purchase or to continue filling orders at a specific price level, or at a supply area to where they are looking to sell at higher premium price levels. You have to understand that liquidity is all over the place within the charts, but we have to be smart as retail traders to know the setups that they're looking to take, and to know specifically which zones or which zones, let's say which zones, supply or demand, makes sense to take. So I'm going to show you, like, just kind of giving you a rundown on looking at the structure of the market, because structure is the most important piece. But we also need to be able to identify, just the right zones to take trades from, okay? And I'm just going to show an example of I'm not going to go into detail about it, because what I'm going to do is I'm going to do a trade breakdown video today, talking about the trades that I did take, a short trade and then a long entry trade that I take. And I want to talk about, and in that video, this is for the elite members, okay? That's going to be a private video that I'm going to post for them, because, they are supporting my efforts as a content creator, okay? And so through the YouTube program, I'm able to give something back to them. You receive the emojis, the badges, the applauded comments, but also what I give back is the trade breakdowns, to where I go into detail about trades that I take, and walk you through the process, my mindset of what I was thinking about and looking at taking a trade at a specific zone. This has helped tons and tons of traders out that are part of this community here. And I thank each and every one of you, first and foremost, who are elite members. But if you're interested in becoming an elite member, I would highly recommend you just scroll down to the latter part of the video in the description part. You'll see a link there that says become an elite member. If you choose to, you don't have to, okay? It's only $6.99 a month. But again, I break things down and go into detail about my trade setups. Today, I'm just going to show you a rough example of what I'm talking about when we're talking about liquidity, and what the banks and institutions were really driving home at trying to do at a better entry point. So let's go ahead and break this down right quick. So again, like I said, liquidity is everywhere. Now, first and foremost, what we must understand and to be able to see is that the market is moving to the downside right here. Okay, you can see that it's breaking structure to the downside. Now, if the market turns back around, which it can at any given point, and starts to break minor areas of structure above, okay, as it's climbing higher, then at one point you could have been looking to go short, but when they start breaking minor areas of structure back to the upside, with maybe say an end all goal to take out this high back up here, which I talked about in prior videos around 709 or 710, that's a major high right there. So that would be a major break of structure. But these are areas like right here, right here and right here. These are minor areas of structure in which the market could focus on and break through those areas. Okay. Now, when I saw the market pushing, it's been pushing lower the last several days. And into yesterday's trading session, which was April 2nd, I noticed that the market started doing what? I talked about this yesterday. It broke above an area of structure resting right here at 275. It pushed up and roughly around 10:20 yesterday, we kept pushing higher after this break of structure, all right? But then we got a little fold back or pullback into the market into the overnight session, all right? So if you see that, pushed up, breaking structure to the upside, and then we got a decent retracement here before it pushed higher and broke through this area of structure at 346, 18,346. Now, as long as the market is breaking structure, in this case here to the upside, all right, as you can see here, we got took out here 275, broke some additional structure to the upside here. We broke above here at 345. See that? Or 346 right there. Okay. And so what we have that is what happened right here. See this push to the upside right here? I'm just going to show you with the arrow line. This major push up right here. Okay. What is that? That's a impulse move to the upside right there. All right. Lots of buying opportunities in which the market started pushing higher, aggressive buying to the upside. It broke structure right here. So this is a beautiful structure break to the upside when it broke above here at 346. All these smaller swings that are taking place to the upside here, these are inducement moves, if you want to call it that, to the upside where the market continues to create areas of demand. So this is a demand area, this is a demand area, this is a demand area, and this is a demand area right here. So these are inducement moves, continuation moves to the upside. Now within this impulse leg to the upside after the market broke 346 right here, we have again these demand zones right here. So each time the market pushed higher and we have a creation of demand where we see aggressive buying, these are areas of or demand zones that are left behind. And the market could test any one of them, reject, and push higher. Now, typically what the market likes to do is the banks, institutions, they like to set up traps, all right? And we have to be smart about which zones to take. On this move or leg to the upside right here, a lot of times they like to test lower areas. So if this was the say the latter portion of the impulse move to the upside here, it'll be smarter for us to get into trades or look for opportunities back down here where prices are cheaper at a discounted area and take the move back to the upside. And if doing so, then they would have taken out this area, and this area back down to the move right here on the inner portion or inner portion of this area where there was a break of structure, a nice break of structure that took place there. But we all know that the market, it does what it wants to do, and not everything is going to be exact science when it comes to trading. Sometimes, they will just pull back to say this demand zone right here and take off, or right here and take off. But what they did do right here, so what I'm trying to say is that sometimes they may not pull back to a 50% area or pull back even lower than that. But what we like to see them do is pull back to where things started taking place at. Remember what I talked about the getting into a trade where the market starts to make the move where the origination takes place, meaning where most of the buying took place at on the move to the upside. Like this didn't fuel right here and here and here. This didn't fuel this move where it started at right here at the bottom to the upside before we got the break of structure. These were just additional demand setups or demand zones that were created based on this impulse leg or push to the upside here. So you have to understand things like that, how the market's moving. It's just creating areas of liquidity in which the market could capitalize on before the banks, institutions want to pull back the key zones. But they're not always going to come all the way back here. Sometimes they may come down to the 50% area or come down even lower inside where the aggressive buying took place here. Now, what I want to show you here is because I know you probably saw me take this trade right here at this zone right here. This was a demand zone where there's aggressive buying to the upside. As you can see right here, there was the aggressive buying right here. But we're at the upper portion of this impulse leg to the upside. So if the market comes back here, we're buying the higher end and knowing that there's definitely areas of discounted prices back down here where the move started at. Getting down here and taking a trade makes more sense than taking it up here. But again, like I said, not all times are they going to just kind of immediately push back to the downside right here. Right now, they're kind of arranging and moving sideways, and we may get a push to the downside here. I'm not sure. But what I saw unfold today was that, you see this line right here, this blue arrow? And this is the example I'm just going to show you right quick when we're talking about liquidity. Most times the banks, institutions will set up a trap. So a lot of people were traders that don't know about what really goes on behind the closed doors, specifically when I'm talking about liquidity, because you have to think in terms. The banks, institutions always like to take out, they like to grab money before they continue making a move. Understand that? So if they were moving to the upside, they want to set traps up to take your money so they can continue to move back to the upside. So they like to take money, get into a better price, and push the market higher when we're talking about going long or talking about demand setups. So within this impulse move right here to the upside, you see this area here? I saw this demand zone right here. I saw this one right here. I saw this one right here. And I said to myself, okay, any of these zones here they could test, correct? Because they're all demand areas. But more than likely, what they like to do is take out an area of liquidity first before continuing to move to the upside. Now, will they break this area up here? You don't know that, but if they take out liquidity, say for example here, and then test another area of liquidity below, I'll be interested because they've capitalized, took and stopped out traders right here. Okay, those that were looking to go long right here, you got stopped out. You got stopped out. You became liquidity. So the market runs lower. It tests this next zone below it. Okay, this is an untested, untapped. I talked about that as being what? High probability zone. Now they didn't come all the way down here, but they did stop here after taking out liquidity. And this was the area in which I was not aiming for, but looking to take a trade at if we got rejection. I got into the trade setup a little late, but this was a beautiful area to take a trade from because they took liquidity. They came here, they rejected the area here. All right. Now, as you can see here, when they came here, they wicked the area, they pushed up, they came a little lower, but they moved to the upside here. Remember what I just said? They like to take out an area of liquidity, tap into a zone right below it possibly, just to push the market back up in the intended direction which you're looking to move. Now, right now, the kind of range is moving sideways now, but they didn't, you could aim for this high up here, but the best means or thing to do is to look to try to take the market back up to any areas of imbalances or gaps back up to the upside. Well, the sell-on took place here. They've got to fill in these gaps back to the upside. And that's what they did. They ran it all the way back to the upside, filled in all the gaps back up to the upside where the high is at. So if you got into a trade right here in this area and took it back up, then you were solid. And that's why I took that long trade. And I'm going to go break that trade down so you can get an understanding as far as for those that are the elite members, part of the private community. Again, it's for $6.99 a month, not a day, not a week. That's for a month. And again, you receive the trade breakdowns and I'll walk through, what I was looking for and talk about where to put your stop at and profit target areas and things of that nature. So, and there's already a bunch of videos on there, trade breakdown videos on there, which you can go through and watch. So if you want to become an elite member, that link is down in the description portion of the video, or you can click on the join link or join button right in front of you. You're going to see two tiers pop up. Make sure you choose the one that says elite channel supporter, and that way you gain access to all the perks and rewards. All right. So, but that's what I want to talk about and show you, was that when you see multiple areas, okay, in this case here of demand, think more logically speaking. Now, sometimes they'll test this area here. They'll pull it back just to this area here and take off to the upside. But most times, I'm telling you, the banks love to get into better price entry points. Why not? It makes sense, right? When you go shopping, you're looking for a deal, right? So you want to get something for a better price. That's the way you have to think logically. That's why it's called supply and demand. Now, could this be a fueled move to the downside here where it takes out additional areas of liquidity? Like it just ran this, it just ran this area right here just by a tick or two. See this area here? So they could, and then it ran it. So basically grab liquidity right there and push back up to the upside. Sometimes they'll do that before going out and testing another zone. But yeah, if you can see here, there was liquidity here and liquidity resting right here. So they took out two areas of liquidity. They grabbed money. They stopped traders out. Those that were going long right here, they stopped them out. Okay. And if you were long right here, they came down, they stopped you out. So the next area that they could possibly come down to, maybe they're going to come down here and test this area right here. Okay. But, just logically speaking, they may take this and run this area of liquidity here to come down here to test a area where the price is lower to get into a better price entry point. And then we may get a strong push to the upside, but we'll see. You never know. We never know what the market's going to do. But I wanted to talk about that today when it comes to looking at liquidity, because this is what fuels and drives the market. Beautiful impulse leg to the upside. Of course, you're going to see areas where you'll have internal breaks of structures or internal structure breaks like right here. And you'll have these smaller areas where we have a demand being set up with these Inducement moves to the upside. Just continuation moves to the upside here that are going to create these areas of demand. But you have to think about liquidity. Where could they take out at? If the move started right here, all this could be taken out just to come back here. And you're going to see these type of things happen all over the chart. Here's another example I just want to show you, a supply one. Like right here, we can see where the market came back and tapped into this zone right here. Okay, why did it tap into this zone right here? Well, this was an area of demand where a break of structure took place to the downside. I'm going to squeeze this together. We're going to go to the left-hand side of the chart. See this area right here, all right? I'm going to, let's see here. What I'll probably do is bring a, well, let's just do this. I'll show you to the left-hand side of the chart real quick. Pay attention here, right below 260, okay? So we'll go over here. It's kind of hard to see it here because I have to, look at the price action activity. Right here, they broke structure to the downside right here. I know I got it squeezed in, but pay attention. They broke below this area of structure right here at 243, okay? But when they did that too, below 243, they came down below 243, okay? All right? And then the market pulls back to break structure lower, okay? So we got this right here, this area here, broke that area structure to the left-hand side of the chart. That's why I always say pay close attention to what took place on the left-hand side of the chart as well. This made for a beautiful supply setup. Aggressive selling, pull back, break a structure to the downside. So this was an impulse move to the downside where we had a break of structure at looking to the left-hand side of the chart. This here was a supply area. Yeah, the market could have came back here and rejected and pushed lower, but look what took place. Remember what I said? They like to take out areas. So when the market came back here, people started selling right here. And they know that. So what they do is they're going to test and move the market a little higher to where they can get into a better price or a premium zone to sell the market at right here. Okay, where the moves pretty much, well, where there was a beautiful supply area set up at a better price area, at a higher price area to drive the market lower. So that's what they did. They ran liquidity right here. So if you got and started selling right here, they took you out. Boom, you lost. What happened? They went right above to the next area of supply. If I said demand, I'm sorry, guys. Supply above here. They rejected the area to get the break and close of the candle, and it's going to run that low right there at 18,212. And it did just that. So what they do, grab liquidity just to tap into the next zone above it, okay, which broke the structure to the downside on the left-hand side of the chart, and then we got a collapse of the market to the downside right here. So maybe you got into the trade, well, you want to get in on the lower entry chart or lower time frame, a lower base chart like I talk about. But this was a short opportunity, and that's why I marked it there. And I took this trade, I think it was I'm not sure if it was Monday or Tuesday. What was this, second? I think it was yesterday. Yeah, the second, yesterday. Okay, I took this trade short right here, and then this one long right here. But anyways, pay close attention to that. See, are there multiple zones or levels to where, that could be areas of supply or demand. If you move to the upside, you got multiple demand zones, and then you see where the market broke the area of structure going up. Well, think about within that leg there, all the areas in which the market could break through, come back to the downside, and take out areas of liquidity to fuel itself back up to push higher. Hopefully that makes sense. I'm going to leave it there right now. And that's what I want to talk about today was just, look at an impulse leg. Just trying to identify what's going on and think in terms of liquidity. Because without liquidity, the markets aren't going anywhere. So think about these things before you take your next trade and get trapped and you become liquidity. All right. That's the thing. Most people get frustrated, especially beginners. They have no idea what's taking place. And they're taking every supply or demand area, but they're not following, the market to really see the bigger picture, because the banks, they know, they know that inexperienced traders are getting in certain price points, and they say, well, we're going to stop you out there. We're going to entertain you, and we're going to fake you out. We're going to entertain you just enough so we can take your money and get into a better price area. All right. So understand that. But again, I appreciate each and every one of you who follows the channel and is taking time to really, find value in the video content that I put out on this channel here. And hopefully, well, I know that it's helping tons of people because people are responding to me and commenting and letting me know. But thank you for doing so. If you want to become, again, a elite member, people always ask me how can they join. Just scroll down to the lower portion of the video, down in the description, and you'll see right below the Discord link. The Discord's free if you want to join. You can join by clicking on the Discord link and you come over and join our community. But you can also become that elite member if you choose to by clicking on the link right below that says become an elite member. Make sure to choose a tier that says elite channel supporter for $6.99 a month. And you gain access to the video playlist and the trade breakdowns as well. So, but if you are a elite member, again, I'm going to post a video. Hopefully I can get it up today, covering in detail both that short entry and that long entry trade that I took. So that it helps you better understand, my mindset or mind frame from which I was taking those trades from. But outside of that, if you're not a subscriber already, what are you waiting on? Go ahead and click on the sub button down below. Make sure to turn on all your post notifications so you never miss one of the uploads. And last but not least, please do me a favor and drop a like on the video. Take care. I am done for today, and I hope you have a safe trading day.